Time now for an in-depth look at the market news on this Friday, and for that I'm joined on the line by Dr. Kim Seiwan, professor of economics at Ewha Womans University. Dr. Kim, thank you for coming on today.
Good afternoon.
As we just heard yesterday, China's Ministry of Commerce said it has reached an agreement with the U.S. to gradually withdraw the tariffs they've put on each other. Does that mean they have in fact reached their Phase 1 deal?
It looks that U.S.-China will go to Phase 1 withdrawal of tariffs agreement. But at the same time, Beijing's announcement of yesterday leaves questions over how much Washington has agreed to give to Beijing. Since none of Trump administration issued a public response on Beijing's announcement of yesterday, I believe that there is still risk in completing Phase 1 agreement. Anyway, this agreement lifted the U.S. stock market yesterday.
Yeah, it's surprising. We were supposed to be signing a deal at this point, right?
Right.
Yeah, well, meanwhile, this trade war has most certainly had a negative impact on Korea's economy. Do you think this gives us a little room to breathe, perhaps?
That's right. It is a really good news to Korean economy since China and Hong Kong together cover a third of Korean total export. There are lots of items that we export indirectly through China to United States. According to Bank of Korea and KDI's recent research, the mutual tariffs between U.S. and China decreases Korean economic growth by 0.3 to 0.4% on yearly basis. So we can say that weakened trade tension between the two countries give positive impact on Korean economy.
Yeah, well, this week it's not just U.S. stocks reaching new highs, but Japanese stocks setting records too. The KOSPI, however, here in Korea has been more subdued. Why is that?
Right. Korean equity market gained about 5% from the beginning of this year, according to my calculation. But if we take a look at other major global equity markets, they had a really great performance from the beginning of this year. For example, U.S. S&P 500 gained 22%, Japanese Nikkei 16%, and Shanghai gained 22%. I believe that the relatively weaker performance of Korean equity market is related to structural and fundamental problems of decreasing domestic investment and export and decreasing corporate profits. And most of all, U.S.-China trade conflicts is related to that.
Meanwhile, zooming out a bit in Korea, Standard & Poor's decided to keep its sovereign credit rating for the country at AA, which is its second highest level, and the risk of default also at the lowest level. But at the same time, we have the Korea Development Institute expecting the economy to continue to stagnate for some time. Why do they say that, and what's your outlook in the near term?
Even with lots of economic problems in Korea, Korea is maintaining great evaluation from international rating companies like S&P, Moody's, and Fitch. For example, Korean rating AA of the S&P is one step higher than that of Japan. When rating companies evaluate sovereign rating, they give a big weight on government debt. So regarding the relative size of government debt, Korea's situation is one of the best between major economies. Korean government debt is like about 50% of total GDP, but Japanese debt size is about 200% of the GDP, and U.S. is about 160% of the GDP. So in this respect, Korea has a great rating compared to other major economies. But it is true that Korean economy is going down under recession.
It's a situation we hope to see turnaround next year for sure. But in
Right.
Europe, the IMF's cut its growth forecast for the Eurozone by the most in 7 years. Is the situation as serious as it sounds? And if so, how might that affect Korea?
Well, Eurozone is now experiencing serious downturn of economy. IMF forecast Eurozone's average economic growth will be about 1.2%, which is decreased by 0.7% compared to its last year's forecast. Particularly for stimulating economic growth, European Central Bank is pushing Germany very hard for increasing its government expenditure. But German government is negative on it. And Eurozone countries, on the other side, do not have much trading with Korea as of now. We, out of like 10 largest export partners, we don't see any Eurozone countries. So Eurozone's recession would affect Korean economy indirectly through intensified global recession.
Got it. All right, Dr. Kim, thanks for helping us look further into these issues. We appreciate it, as always.
Thank you for having me.